Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost, your weekly fix of local and international news for investors and traders alike. These are the stories that really caught my eye in the past week. Welcome to this episode of Supernatural Stocks, being recorded in the small village of Radlett in North London, near Arsenal's training ground for those of you who are football fans, and that's why you'll have to forgive me for slightly different sound quality to what you might be used to. Also, to be honest, I'm tired. You see, there's tired and then there is post-Le Mans tired, and having the sounds and smells of the world's finest automotive manufacturers and perhaps the world's most changeable weather thrown at you for an entire weekend, along with the attendance of hundreds of thousands of people, all you want to do on the Monday is crawl up and sleep in a quiet corner. It really was a spectacular experience that was a strong reminder for me of how the most famous automotive manufacturers in the world have built their brands, on the track. As a lifelong motorsport fan and indeed a student of business, it was an incredibly special experience for me to attend Le Mans as part of a broader trip to understand more about the UK market and Dubai as well later this week. You see, when it comes to luxury goods, prices cannot be justified based on the utility of the product. A Louis Vuitton handbag is just for carrying things, right? A car, well, that just gets you from A to B. Even if we went a step further and pointed out that a sports car offers a thrill that a normal car can't, there's still a massive price difference between a top-end Porsche and even an entry-level Ferrari. And in all but 0.1% of applications, the performance won't be different. You'd actually have to be a remarkable driver to extract that difference, and you'd have to be on a racetrack. And yet, as we sat across from Casa Ferrari, the power of the brand was on full display at their high-end hospitality stand. The race-winning Ferrari 499P was on its way to the checkered flag. People who I believe paid as much as €10,000 per ticket to sit in the Casa Ferrari stand were waving their Ferrari flags like mad to welcome their heroes home. For the second year in a row, Ferrari would take the top step on the podium, having taken victory in a huge battle. Make no mistake that Porsche was right there at Le Mans, but the difference is that simply showing a Porsche key or being a guest of an owner got you into the Porsche Experience Center. Over at Casa Ferrari, they don't care what Ferrari you own. You still need to pay a fortune just to be there. The level of exclusivity versus the likes of Porsche needs to be experienced to be understood, and that's how you learn about luxury brands. It's really no different in fashion, which is why Hermes is seen as the correct comparison for Ferrari on the market. You cannot just walk in and buy a Birkin bag. You have to schmooze the sales assistants and then wait for a bag to come in. You don't even get to choose the color. And if you say no to your allocation, well, good luck ever getting another one. You need to buy it and then either keep it, or if you really hate it, sell it to a luxury reseller. Wait a while, and you'll probably even make a profit on that bag. Now, it's easy to sit back and think, well, that's ridiculous. I would never do that. And perhaps you wouldn't, even if you had this kind of money. But there are many fabulously wealthy people who do exactly this. Having stopped in at Harrods in London and witnessed these luxury fashion brands in full flight, I can confirm that we simply have no idea in South Africa how this world actually works. Absolutely none. The few luxury stores stashed away in Hyde Park Centre or the V&A waterfront give you no indication whatsoever of what that world looks like in a place like London. And this is why it makes it difficult to understand why Ferrari trades on a price-earnings multiple of over 50 times. When it initially listed, Ferrari, which by the way has the excellent stock ticker RACE, traded in the 20 to 30x range as the market tried to properly understand it. You see, the market was willing to give it a premium multiple, but they didn't realize quite what they were dealing with. And to be fair, this was nearly a decade ago. Ferrari's product range has only gone from strength to strength since then, and they have shown the market that they are not just a luxury car company. No, they are a luxury company, full stop. This is why the multiple has traded up to the hallowed ground where you'll really only find Hermes as well. LVMH, that's the owner of Louis Vuitton and a whole bunch of other things of course, is more like Porsche when you consider that group as a whole. It's a mix of affluent products and a few really high-end options, but it's still nothing in the exclusivity leagues like Hermes. Of course, the market isn't blind to financial performance. You can't just be luxury for the sake of it and then trade at a juicy multiple. From 2016 to 2023, Ferrari grew its earnings per share from €2.11 to €6.9. That is a compound annual growth rate over 7 years of 18.4% in euros. Now, leaving aside the multiple expansion, that is a fantastic performance, obviously. Add in the multiple expansion and you can now see why the share price has delivered a 28% CAGR or compound annual growth rate since listing late in 2015. For all the race wins, high-end ticket sales, and waiting lists for models, though, the reality is that the valuation multiple probably can't go much higher. Any further multiple expansion takes us into literally uncharted territory and would put Ferrari at a level even above Hermes. It's not impossible, of course, but as we push into somewhat quieter vehicles and electrification and pressure around environmental stuff, there is some uncertainty over what that might mean for Ferrari enthusiasts and what these vehicles sound like, and I would be a little bit nervous of that. This means you have to look at the underlying earnings for further share price growth, as you can't just assume that the multiple will keep going. But luckily, there's plenty of good news there. Ferrari's business has always been rooted in motorsport, so a year in which they've won the Monaco Grand Prix and Le Mans certainly is not going to harm the level of brand interaction and demand from customers. Ferrari famously says that they will always build one less car than they can sell. In reality, the number is a lot higher than one. Manufactured scarcity is how they can keep ramping prices on not just the base cars, but their endless list of options. Oh, you want a badge on the fender? Great, that's extra. They call this the value over volume strategy. They will make the same number of cars each year, but they will keep charging more and more and more because they can. And the moat goes beyond just the brand here. The level of research and development in the group is just remarkable, actually. Their pit stop strategies in Formula One might not always be on son, but the company submitted one patent application every 2 days in 2023, and that's just in Italy. This includes extensive work in the electrification space, with Ferrari inaugurating their new e-building this year, as was promised to the market 2 years ago. And this brings me to a closing point on why Ferrari's multiple is probably justified at these levels. Execution, consistency. When you promise the market something at an investor day, you need to deliver it. And getting this right does wonderful things for a valuation. Getting it wrong, well, that does terrible things, of course. And as intense and remarkable as European car culture is, and I'm so glad I've now seen it firsthand, the United States is even bigger and better. It's hard to believe that Ferrari will ever run out of customers or the ability to keep charging them eye-watering amounts of money. And to close, enjoy the sounds of the crowd cheering as that 499P came home for its second win in a row at Le Mans, cheered on by the crowd sitting across the way at Casa Ferrari, but of course really cheered on by just hundreds of thousands, if not millions of people worldwide who have lived and breathed this brand in their motoring ambitions for their entire lives. That is why Ferrari trades on a 50 PE. There's no such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in supernatural stocks should be taken as advice.